Today, global markets are paying close attention to the rapid melting of ice in the Arctic and Antarctic. Investors, businesses, and policymakers alike are assessing the potential ripple effects. But how does melting ice translate into tangible impacts on oil, gas, and international shipping? In this video, we'll explore the economic consequences of polar ice loss and why it matters for the global economy. The Arctic and Antarctic are no longer distant, frozen landscapes. They are increasingly central to discussions about global finance and trade. As ice sheets shrink at unprecedented rates, new shipping lanes are opening up, untapped natural resources are becoming accessible, and climate-related risks are reshaping markets. Understanding these changes is crucial for investors, traders, and anyone following global economic trends. Today, we will cover the phenomenon of polar ice melting, its impact on energy markets, shipping logistics, and the wider implications for the global economy. The polar regions store vast quantities of ice, acting as natural regulators of global climate. Recent studies show that Arctic sea ice has declined by approximately 13% per decade since 1980, while Antarctic ice shelves are also experiencing significant losses. This melting is not just an environmental concern, it has direct financial and economic implications. Oil and gas exploration becomes more feasible, shipping routes shorten, and global commodity prices may fluctuate. Understanding these trends can help investors and businesses anticipate market shifts, while also highlighting the interconnectedness of environmental and economic systems. One of the most immediate economic effects of melting polar ice is the access it provides to previously unreachable oil and gas reserves. Key points: the Arctic region contains an estimated 13% of the world's undiscovered oil and 30% of its untapped natural gas reserves. Melting ice allows energy companies to plan exploratory drilling and potentially extract these resources. Increased supply prospects can influence global oil prices, impacting both producers and consumers worldwide. Example: in 2021, reports of ice-free Arctic passages led to renewed interest from oil giants in Norway, Russia, and Canada. Financial news outlets noted that the anticipation of new supply contributed to volatility in oil and gas prices, influencing stock market updates in the energy sector. Investors monitoring dollar news and currency trends should note that changes in oil and gas markets can indirectly affect the strength of the USD, especially given the dollar's role in pricing global commodities. Melting polar ice is also reshaping maritime logistics. Traditional shipping routes between Europe and Asia are long, often requiring passage through the Suez or Panama canals. New Arctic passages, such as the Northern Sea Route, dramatically shorten travel times. Benefits: reduced fuel costs for shipping companies, faster delivery times, potentially lowering prices for consumers. Risks: navigational hazards from unpredictable ice conditions, environmental concerns over increased shipping traffic in fragile ecosystems, geopolitical tensions over control of new shipping lanes. Example: in a 2022 study, it estimated that opening Arctic shipping routes could reduce the voyage between Rotterdam and Shanghai by nearly 40%, offering both cost savings and strategic advantages. Financial markets responded with stock market updates reflecting increased valuation potential for companies in shipping, logistics, and related sectors. Changes in polar ice and energy accessibility have wide-reaching implications. Investors: opportunities emerge in energy exploration, shipping, and infrastructure companies. However, volatility is higher due to environmental unpredictability. Businesses: companies reliant on global shipping may benefit from reduced transit times, while those exposed to climate risk may face increased costs or insurance premiums. Consumers: lower shipping costs could eventually translate into lower prices for imported goods. However, energy price volatility may affect heating, fuel, and electricity costs globally. Case study: When the Arctic sea ice reached a historic low in 2019, energy companies and shipping firms saw immediate market reactions. Financial news reported fluctuations in oil stocks and shipping equities, demonstrating how closely environmental phenomena can influence economic indicators. Beyond immediate impacts, polar ice melt has profound long-term consequences. Commodity prices. Oil, gas, and shipping costs will continue to fluctuate as new reserves are exploited and new routes become standard. Economic analysis. Countries with Arctic borders, such as Russia, Canada, and Norway, may gain significant economic leverage. Global economy. Changes in energy supply and shipping efficiency can alter trade balances, currency trends, and stock market performance worldwide. Climate change also imposes regulatory and reputational risks. Companies investing in Arctic operations face scrutiny over environmental responsibility, potentially influencing long-term financial stability. The melting of ice in the Arctic and Antarctic is more than an environmental story. It is an economic event with tangible effects on oil, gas, and global shipping. Key takeaways. Melting polar ice opens access to new energy resources, impacting commodity prices and market volatility. New shipping routes reduce costs and delivery times but bring environmental and geopolitical risks. Investors, businesses, and consumers should monitor dollar news, financial news, currency trends, and stock market updates as polar changes influence the global economy. Thank you for watching this exploration of how polar ice melt affects the world of finance and trade. If you found this video insightful, be sure to subscribe to Dollar Newspaper for daily financial news, economic analysis, and updates on the forces shaping the global economy.